Okay, good morning. Today is day 15, and the topic is how to pick the right industrial property. What I thought I would do is actually kind of go a little bit behind the scenes on a few industrial properties that I had been working on just at the end of 2019, kind of coming into 2020, because I think that sometimes showing you like what not always what works, but sometimes what isn't working is just as valuable. And so uh, I was sent these three properties, very reputable industrial broker here in Calgary, and I started to work on them. And immediately I loved the returns. The tenant was amazing, and they were all properties were in great locations. And so then you might be asking, okay, well, all that sounds great. Why did you walk away? Why didn't you end up closing on them? And there was two main challenges that I ran into when I was getting into due diligence, if you will, and it really caused me to kind of step back and assess: was the risk, could I quantify the risk? Number one, and was I willing to accept that risk? And so those two challenges were: number one, the terms of the lease were short, meaning that I only had about I want to say around 4 years left with this tenant. And so you might be saying, okay, well, the tenant's been there for 20 years or however long they'd been there. I mean, it's probably unlikely that they're going to move. And while that is accurate, the reality is if they do move, then what do I do? So that's kind of question number one. And that kind of leads into the other challenge that I had, and that was the buildings themselves were, I don't want to say they were obsolete because that wouldn't be true, but they were old and tired. And so when I'm looking at those buildings and I'm asking myself, okay, like if this tenant leaves, who am I going to put in here? Who's going to backfill this property? And when I really tried to get a handle on that, and I did a tremendous amount of work from talking to leasing agents at multiple brokerages, lenders, um, business owners in the area, going up and down, talking to I mean, we did a tremendous amount of work, and I just couldn't get comfortable that I could put another tenant into that building at rates that would make sense to me. And so when you consider what it is when you're investing in commercial real estate, you're really buying a stream of income. And so that stream of income is really the underlying, like who's paying that income is your tenants. And so in apartments or multifamily, that's usually why most people kind of, I think, stay with multifamily because it's very easy, right? Everyone needs a place to live. Okay, that people get. When you get into industrial, retail, office, like commercial uses, it's if you're unfamiliar with industrial users, then it's more of a challenge to understand who is the user that's going to go into that building, right? And so in this situation, I've done industrial leasing, sales, development, so I've got a pretty good handle. But I was still running into the challenge of, okay, so what happens if this tenant leaves? And that was really where the risk was in the deal. Now, could I get around that risk? That's what I was really trying to negotiate and understand. And I don't want to get into the details because it is still a prospective portfolio of properties that I would look at. Um, but just understand that there's going to be risk and reward. In this case, it was high risk, high reward. And what I was trying to do is take that, like if you got risk and reward, I was trying to take that risk and pull it down much lower and I was prepared to take even less return in order to get certainty. Um, and so I guess one of the other kind of last things to consider is I'm not the only person that was looking at that risk, because when you go in to get bank financing and the lender says, okay, so I'm going to give you, let's say, a 5-year term on your mortgage, but the tenant's only there for 4 years. So how are we going to make that work? And generally what they would do is they'll either hold money back, they're going to put money into escrow so that if the tenant leaves, the bank still gets paid. They want personal guarantees. So the bank is going to be covered, and it's really on the owner to satisfy that. So just something to kind of consider when you're looking at properties, what you're looking for, the property itself, the tenant, the location. Um, those are kind of, there's just three off the top of my head. I'm just trying to think if there's anything else. Obviously, the returns, how much are you going to get paid? I mean, when you have Amazon in your building, as an example, you might be prepared to take a 5% yield or return because you have confidence and certainty that they're going to be there for the long term. If you've got a tenant that is maybe a smaller, I'll use the word mom and pop, they may still have a very good income, but they're not the same type of credit. Well, you may say, for me to take that risk on, because I don't know the certainty of that cash flow into the future, I want a 7 or 8% return or 10% or whatever it happens to be. So that's one kind of risk. The other risk is, how quick can I lease this up, right? I mean, I've got clients in Toronto and Vancouver where if a tenant leaves, that's almost like a good thing because they can backfill that tenant no longer at $9 a foot, but maybe $14 a foot. And so there's just so many variables that you need to be aware of. And it's really why, when you understand your market and you understand who the players are, who the tenants are, and you've got like a real sensitivity in terms of what's going on, you can make those investment decisions. Because I can tell you, if these properties were in either Vancouver or Toronto, I would have bought them 100%. But it wouldn't have been at that kind of a cap rate, because the vendors would also be aware that it'd be very easy for them to backfill. So, I guess what I'm saying is there's just there's no perfect deal out there. Okay, so if you are interested in industrial properties, obviously you can go read the article that I wrote today. I go into more details, the types of industrial properties there are. I would suggest finding a book on Amazon. Like, I'm not an expert at this. I know it very well, but there's certainly people that have been in this business for a lot longer that have written books that I would suggest going out and reading. So you probably just go into Amazon and type in industrial commercial real estate and just find the books that are there. And then secondly, my book, Club Syndication, is really like how to raise capital and how to find commercial properties, which would include industrial. And you can get a free PDF at my website, shanemelanson.com. I'll probably put a link in here, and that's it. So day 15, how to find industrial properties, what to watch out for, and hopefully that was valuable. If you liked it, you want to subscribe, comment below. I will certainly do my best to respond in a timely fashion, although I'm going to be traveling for the next week, so I might be a little bit delayed in getting back to you. So have a great day, and we'll talk to you soon. Bye for now.